I am Jagat Gamanayaka. I'm a was at NSB as Senior Deputy General Manager. So it is a I'm usually covering that the credit industry and the competitive environment and the advanced diploma in credit management. And rather unfortunate to be have a conduct the classes like this because it is prefer and always better to have a one-to-one dialogue. But due to this pandemic situation, we compelled to carry out these uh, courses through electronic means. Okay, let me just explain to you what is the learning objective and what we want to get it knowledge about the Sri Lankan credit industry and the competitive environment. And this time this year I've totally changed my way of presenting, taking into account the present context into account. What I'm going to discuss with you, maybe a couple of hours, maybe we will go till 1:30 and maybe for next Saturday as well. And these are the key areas I'm going to discuss with you. So I just give you an introduction and then competitive forces affecting the credit businesses and credit industry analysis in Sri Lanka. And we are going to discuss about the pre-COVID-19. That means 2019 and up to 2020 March. How these economic, legal, political, ecological, and social, cultural, ethical factors to for credit business. And then the last part, what I'm going to discuss with you, impact of post COVID-19. So that means after 2020 March, how these pestle factors impact your credit businesses. Okay, right. Let me first look at it. What are the areas I'm going to cover under introduction period? So introduction to credit environment. So briefly, I'm going to touch with you about what are financial institution very briefly and key credit functions of these financial institution and drivers of credit in today's credit business and what are the challenges you are going to face, and then the three fundamental critical functions, central questions this credit managers at all financial institutions going to face. Those things that comes under introduction area. So we look at the second part and the competitive forces affect credit business. So I'm going to use these, everybody's knowing this Porter's five forces model, but we look at it, this Porter's five forces model in a different angle, right? There, of course, we are going to discuss who are the major players in the market, and bank, financial institutions, microfinance companies, and those things, what are their market share, and in terms of credit, right? In terms of credit, and the threat from fintech companies, and the power of suppliers and customers. So we look at it, the competitive forces, how it impact or affect your credit business using the famous Michael Porter's five forces model, but in a different angle. Okay, so let me look at it, the other area. So the credit industry analysis, which I'm going to discuss with you, why assets are important for credit manager, um, and why loans and advances are important to the financial institution, right? And also we're going to analyze the total credit market in Sri Lanka, right? Uh, how it is moving, whether it's stagnated, the growth, and things like that. I'm basically going from pre-COVID to post-COVID. That means pre-COVID mean I'm referring to 2019, what happened to credit market in Sri Lanka up to March, and from 2020 March onwards, what we going to impact the business, right? Then the last part, the next part, impact of pre-COVID, all these festal factors, how these factors impact credit business. Now, for an example, the legal factors. Now, what are the new rules imposed or introduced by or going to introduce by our regulator? What are the political, economic situation? What is the country's economic situation? So we look at it the social, cultural aspects, and we look at it technical aspects. So all this how affect your credit business. And the last part, which I think is the most important area, where I'm going to discuss with you, the impact of post COVID-19 on pestle factors with respect to Sri Lankan credit business. So what is the post COVID-19 economy? And what are the regulatory support and directions given by Central Bank of Sri Lanka? What are the government initiatives uh, uh, to address this post COVID-19, and how these factors or some decisions or some measures taken by regulators as well as the government impact on banks credit business, good side and the bad side. And that these are the areas I'm going to discuss with you throughout my lecture, right? Okay, now before that, so first we look at it, credit environment, right? The first topic. Okay, what are financial institutions? Some of the cues I have already given to you. You can refer, but some of the slides I have not incorporated on due to certain factors, due to the patent rights of these slides. I cannot mail to you, but you can just look at it. What are financial institutions? So, as everybody's know, so financial institutions are the backbone of any economy, right? So every financial transaction make it possible because of financial institutions. These are fundamental. If you study your BBF, so what are financial institution, we'll talk about this, right? So financial institutions are basically intermediary, right? Is an intermediary, and what they are doing is transfer of funds from economic agents with excess funds to the economic agents in need of funds. That is credit business basically, right? Let's look at it. Key credit functions of financial institution. What are the credit functions? There may be a lot of other functions are carried out by financial institution, but what are the key credit functions of financial institution, right? Before you get into the more deep understanding. So the first one is size transformation. So what is size transformation? So what is size transformation mean? So as bankers, as financial institution, we collect small rupees from customers, and then what happened, we converted these small units in for a loan. Now say if you want to buy a car, so banks are collecting 100,000 rupees from each and pool it, make it for 100,000, and will give him to purchase a loan. So that is what you call size of transformation, right? Then the second credit function of finance company or bank is maturity transformation. Now, banks are collecting what? Short-term funds from the customers, right? Typically a shorter term than the assets, right? So we collecting the small deposit from customers and give it to a customer to uh, pay their loan in a long time duration. So that is what you call maturity transformation. That means, so clients are depositing, so those are we call short-term assets, and for short-term liabilities. And for example, so we collect the small account deposit from customers and give them a 25-year loan, housing loan, right? So there's a maturity transformations. So who will take care of that? By the bank, right? And all Sri Lankan banks are facing some sort of a maturity mismatching in asset and liabilities, right? But one of the main functions of a credit functions of a bank or financial institution is maturity transformation. The first one is size transformation. Second one is a maturity transformation. And the next one is we call the risk transformation. Now, who is going to take the risk? But always there is a mismatching, right? And we collect funds, deposits are short term, credits are long term. Always bank is facing a risk. So banks take that responsibility, thereby transforming the risk from short-term deposit to the long-term loans, right? These are the three main transformation or functions carried out by banks. One, size transformation, then maturity transformation, and risk transformation. So, okay, now what do you mean by an environment? Now, Wikipedia has defined what is environment is basically all living and non-living things, right? But in credit in general is granting money for effective utilization, right? In other words, is a method of making reciprocity formal, legally enforceable, extensible to a large group of unrelated people, right? So what is an objective of granting a credit? Basically for minimizing the credit risk. So what is credit risk? So credit risk is probability of not paying the loan obtained on time as per your terms and condition. So therefore, remember, credit environment is simply try to minimize the credit risk or establishing a good credit culture for your organization. So what do you mean by everybody's are talking about quality credit? So what do you mean by a quality credit? What do you mean by a quality credit? Now, what is quality? Loan mean loan should be used for purpose for which it is granted. So most of the time, why it is not quality? Because the loan taken by a customer is not used for that particular purposes. Then it's not a quality loan. And transaction has to be both parties is reasonable to the customer as well as to the bank. Banks are doing a business, so they need some profits. And also, it should be a quality loan if you paid with interest on time as agreed. Then it's become a quality loan. And also, that should be a bring a reasonable profits to the bank. So that is what you call by a quality loan, right? Okay, so what are the drivers of credit, right? What are the drivers of credit? So affordability, credit worthiness, and the regulations, government policy, development of internal system, all will facilitate for granting a credit. So these are we considered as drivers of credit. Okay, just to give you a brief introduction. So why credit is a bread and butter of the banks? So we, as you everybody is aware, so credit delivery is considered to be the backbone of the banking. Why? Because it contributing to profitability, contributing to the profits of the organization, right? So therefore, the banks or financial institution stability is depend on the way you grant credits. That is why you call it is a credit is a lifeblood of any organization. Okay, let's look at it today's credit business. What is credit management? So we need to look at it of broader dimension. One is global consideration. So impact every every credit decision, strategic credit decisions. We cannot think locally. We need to look at it, what is taken place in the global, right? And second point is risk management. And it's become a strategic credit management tool. Right now, you noted that in 2007 and 2008, the financial crisis, one of the reasons the financial experts was highlighted, that was happened because due to poor risk management. So we need to understand, so we need to look at it, the risk management aspect with credit management. And also we need to look at it, some natural issues and some pandemic now today what we are facing. And also we need to look at it, the digital environment. It's become a strategic issues. When you're managing your credit, we need to look at it this dimension also. All these three need to be done with a good business ethics and corporate governance. And it's become a prerequisite for good credit management today to conduct your businesses ethical and corporate governance. So we need to take into account these things. So let's look at it. What are the challenges faces by banks today? Right now, you see extreme competition among financial institutions. Right, we are going to discuss how many financial institutions and how many banks are in Sri Lanka, but we get a lot of competition from financial institutions. And every rupee earned is hard fought. It's not very easy to get the money, so we have to fight for that. So that's the challenge all banks are having. And also we need to satisfy various stakeholders, right? It's the greatest challenge. But for private banks, their shareholders, they are just pushing the board of directors. Then the board of directors are pushing the senior management, and senior management are pushing the junior level management. And so we need to satisfy everybody, because the different stakeholders need to be satisfied. That is the most challenge we are facing. And then penetration. So now is Sri Lankan market is a 1.212 million market, so very small markets. Now are we going for, we are in the final bottom as far as the penetration is concerned. And also another important thing, first to market, fast to market, and best to market. So we have to do quickly before my competitor will do, and we quickly and also do a better job. And also we have problems reducing margins and pricing cost. Our employee cost is increasing, the margins are squeezing. So all problems we are facing. And also the customers also techno savvy, and they're not loyal anymore. We are talking about the customer relationship management, brand loyalty, all these things. Now are you thinking whether the customers are loyal? Are you not going for another bank who offering us a lesser interest than us? They redeem and go to another bank. And also they're well informed and they're demanding. And also remember, another important thing is the regulation. So regulators are, they are also come up with new rules and regulation directions, right? That's the most important, the top challenge today. And also now, top of this, the pandemic issues. So these are the today's challenges the credit managers are facing, right? Now, so are all bankers working harder? Even though these days you're at home, but still you are working hard. So ever before to meet these challenges, right? And constantly being asked to do more with less, right? So then, given this continued cost pressure, what our management is telling us, execute. It's a mantra for bank. Whatever do it. So under such circumstances, what credit managers, as I told you at the very beginning, at all financial institution, face three central questions in thinking their business in strategical point of view. What are the three central questions? Where are we now in terms of credit? Where do we want to go? And how will we going to be there? And that is the issue. So where are we now? We need to do a situational analysis in terms of credit. So what is our credit portfolio? What products will bring you much more revenue? Things like that. Okay, what are my objectives as far as the credit objectives, right? How can I increase my credit portfolio, right? What is the profits? How many loans we are going to get, right? So for that, what you need, we need strategies. We need credit strategies, and also we look at it. How will we know if we are get there? So for that we need KPIs. So this is the questions, the three central questions that every credit managers are facing today. Right. The first one, where are we now? So what do we need to know? We need to understand our bank's present credit situation. What is our market standing in terms of housing loan? Where are we? We are the number one. In terms of pawning, who is the number one? We know as far as the pawning is concerned, it's not ideally a credit product, but People's Bank is number one. Number two is the Bank of Ceylon. Number three is NSB, and four is HNB, and five come Sampat, like that. We need to understand what is your credit in terms of housing, in terms of term loans, or maybe other type of loans. What are my market standing? What is my market share? So whether my product and services are appealing to your customers, right? What are my weaknesses? What are the competitive pressure I'm facing from my competitors, right? And all things we need to understand as far as the credit is concerned. Then we look at it. Where do we want to go? So we need to identify directions. What is the directions of my organization from years ahead, maybe 2 years ahead? Where do we want to go? Become a market leader in housing, market leader in commercial loan, corporate loan, and things like that. Third, so how will we get there? So crafting and executing credit strategies to get the banks from where it want to go. So what makes the difference, right? So if you crafted and execute your credit strategies, and your company going to be, your bank going to be a standard performer. So that is how you differentiate from your company. To do all of these things, right? So what you need to know? You need to understand the situation. So what is your industry? What are your competitive environment? And what is your market position? So certain information, your own organization, your competitive industry organization, and your market information you need. In order to get a deep understanding about your credit industry and also for your competitor environment, so you need to collect some information. And why you need to collect some information? So thereby you can understand what are the features, what are the dominant economic features of the credit industry, and what are the competitive forces, what are the market positions, what are the strategic motives, and all things. Or you need to answer all these questions, right? Okay, so that is basically my area of industry, credit industry analysis, and knowing the competitive environment. And we just completed, right, the introductions. Under that, what we have discussed: what are financial institutions? What are the credit functions of financial institutions? And then we discuss about what are your organization want to be, where your organization is going to be and how to be there, right? So get an idea about your organizations as far as the credit business is concerned. So now let's look at it. The second part of the my area is what you call competitive forces affect credit business. So this is a very famous concept or the theory developed by Michael Porter. You know, the Michael Porter is the person, only only person still is living in the world, and he may came up with a lot of theories and introduced a lot of concepts to the management and to the business world. And one thing is, you know, the competitive strategies, and Michael Porter says competitive strategies like differentiations, cost leadership, focus, and international national competitiveness theories and things like that. And like this, and the Michael Porter is the guy, he was the professor in Harvard Business School, and he has written around 18 books now. I think he's now around 70 odds, but still living. Was Michael Porter. Right now, why Michael Porter? So analyzing the forces analysis, and actually it is a framework for industry analysis and business strategy development. Now here what we are discussing, credit industry analysis and business credit business strategy development. So Michael Porter, this concept is facilitates us to come up with a better strategic model, right? So let's look at it now, how we are going to use this Michael Porter's industry analysis, right? Okay, first point is competitive rival. Right, what are the characteristics in Sri Lankan banking industry? So let's look at it now. The Sri Lankan banking financial market, right? Oh, you know, the banks are basically consist of uh, uh, basically is consist of oligopolistic market, right? There are some few players in the market, uh, and there are more number of small players in the market, right? So okay, let's look at it. Who are these players? I'm referring only to the credit business, right? Money lending. What do you mean by a money lending? Money lending can be described as lending money at an interest, with or without a security, by a money lender to a borrower. So who are the people who carried out this business? Largely licensed banks and other financial institutions like finance companies, microfinance non-government organization, cooperative rural banks and thrift societies, and some of the community banks and things like that. There are some more microfinance companies are available in Sri Lanka, right? Okay, let's look at it, the Sri Lankan banks. How many banks in Sri Lanka? Right, as for the 2019 December, we had around 32 banks in Sri Lanka. Those are 26 commercial banks and 6 licensed specialized banks. Now, if you look at it in 2018, we had 7 licensed specialized banks. Are you well aware that? Now, one of the licensed specialized bank, Sanvardhana Lankaputra Development Bank, was bought by uh, RDB, Regional Development Bank, and then the National Savings Bank taken Sri Lanka Savings Bank as a subsidiary. So that is how it has come down to 6. Earlier it was 7. Now there are 32 commercial bank in Sri Lanka, and you know, in 2000, latter part of 2019, the foreign ICI banks was taken out from the business in Sri Lanka, and also the latter part of Jan December, Axis Bank also moved out from the Sri Lanka. So they are, at the moment we have around 31 banks. So we have, those are the players in the market. These are inter-rivalry. So we have a bank in outlets around 7,000 lots. So this is the banking situation. If you look at it, what do you think about the Sri Lankan landscape about the banks? So what do you mean by a bank density? So bank density means number of branches for 100,000 people. In that sense, right? So we have around 80 per 100,000 adults. So bank branch density is around 18 in Sri Lanka. What do you think? Is a good or bad? It's a good, because the financial inclusion, I mean, people are more reaching to the financial institution. This is in number of branches are concerned, right? So around Sri Lankan 82% of adults have some sort of an account with a financial institution. In that case, Sri Lankan landscape is a rosy picture. But despite the fact of all these things, so around 350 million estimated credit gap for women entrepreneurs in Sri Lanka. 350. There's a market potential despite of number of institutions. Only 17% of women have been successful in borrowing from formal sector. So therefore, all the 80% of the borrowers are going for informal microfinance sector, especially by the women. And it was estimated that in informal microfinance companies were serving 1.4 million low-income people, and the outstanding and loan portfolio is about 18 billion at end 2019. These are the some research company has done this survey, and I got it from that. So as far as this is an inter-rival, so there are a lot of players are playing, but still there is a huge gap. If you look at it from the bank's point of view, it's 2019. If you look at it, some banks like NSB, BOC, People's Bank, some part commercial bank, HNB, Ceylon, these are the more major players in the market, right? So their asset base, ranging from 1 billion, 2 billion, 1 billion. So that's the range, and also their deposit range also going like this. And also if you look at it, some of the ratios and average deposit to borrowing ratio, if you look at it, some of the key points here, 8.63, 7.11 BOC, People's Bank 7.7. So you see, all are in the same rates. That means huge competition among the banks. That is what called Michael Porter's inter-rivalry, competing banks for credit business. So huge competitions are taking place in the banking system. So if you look at it, the deposits of the banks, and these are prime source of funds to the banking sector. You look at it in Sri Lanka banking sector, so around 9 billion, 9 trillion basically. So the deposit base as in form of demand deposits, and say end of 2019, time deposit and other deposits, what is the total value of the deposits in the banking sector is around 9 trillion, close to 9 trillion. Those are sources of fund. So those are the money we can give it for lending, right? If you look at the ownership of deposits of commercial banks, if you look at it, so most of the times those are individual customers, right? Individual customers, and majority of deposits are coming from long term, and the savings is around 26, and 7, and demand deposits are very small. So what all banks are worried about is their CASA, right? The ratio between um, the CASA ratio is the important thing. This now slowly is coming down, but again it's going up because there's a gap between term deposits and the savings deposits get thinner and thinner. So therefore, people may be going for more on a saving base. You can improve your CASA. So if you look at it, the banking industry deposit is like this. And mind you, the majority of deposits are still lying with state banks is around 50%, almost close to 50%. All these Bank of Ceylon, NSB and PB are contributing the major share of their deposits, right? Okay, so these are some ideas about the Sri Lankan banking industry in terms of deposits. In terms of loans and advances, again, still against Sri Lankan market is State Bank is considering 41, but as far as the loans are concerned, if you note that this from this figure, around 58% was given by the private sector. So that's a good sign. So the deposit size, more money is coming from public funds, I mean public deposits to the state center, but they are not given same loans as what commercial bank is doing, right? In that sense, the loans and advances given by the banking sector is better than the government banks, private banks better than the government bank. Right, now that's you get an idea about Sri Lankan banks, and you know the Sri Lankan banks are categorized based on asset base. So banks are basically divided into three groups. One is large banks, then the middle banks, and the small banks. So the large banks mean the deposit base, or sorry, the asset base is over 500 billion. We call them as large banks, and those are comes under Bank of Ceylon is having around 2 trillion, and then People's Bank is having around 1.7, and then commercial is around 1.4, and then NSB and the HNB as the 1 trillion banks. So, and Sampath is close to 800 odd billion terms of assets, and all are we call them as big banks. The second set of banks we call medium banks, where 200 billion asset base is 200 billion to 500 billion. We have around 5 banks, right? All the 20 odd banks comes under less than 200 billion, right? It's terms of assets. Now, please remember why I'm telling this. This is important for us to understand why I'm telling those things, because it's benefited for your future slides, right? So asset-based Sri Lanka are divided large, medium, small. So majority of banks in Sri Lanka comes under the smaller category. So then another set of groups, another set of competitors, right? We look at it, we need to look at it, the licensed finance companies and specialized leasing companies. In end of 2019, we have around 42 and 4, and you may note today, the finance, the one of the largest, the oldest, in fact, the oldest finance company was cancelled their license, but that was cancelled in 2019 December, right? But then the finance company has made a request from the regulator just to reconsider their cancellation, their license. They try to augment their capital base, but they not in a position to find a good partner or good investor. So therefore, central banks, according to the Finance Act in 37 number. So Monetary Board has the right to cancel their license. So from 22nd onwards, from yesterday onwards, the finance companies has turn out their license, and there's another company before that, TKS, also cancel their license. And secular finance also, central banks given warning, and they have in a position to augmented their capital strength, and therefore they was given the freedom to operate. So this around 40,000 customers of the finance company, and they are compensated through a deposit insurance scheme. Okay, so that's another things, right? Okay, so we have around this finance companies has given 3 million loans, number of loans, not the worth, the number of loans in this sector, and they have around 4 million depositors, right? They also have a huge branch network, 1,432, and they are having a deposits of 757. The important thing is this sector. You noted that is NPL is going. So their cost to income ratio is varying from 75 to 40, and some bad companies are 75 and some good companies are 40, right? So this is the situation in Sri Lanka, finance companies concerned. So if you look at it, the deposits compositions of, we look at it, the deposits compositions of the LFC, Sri Lankan banking sector, where we have around 9.1, and if you look at it, even though the compositions of the deposits of the licensed finance companies are around 756 billion. So altogether, we have a Sri Lankan market as far as the deposits are concerned is how much you think is close to, in that case, is 10 trillion, right? 10 trillion. So the entire market, Sri Lankan market, as far as the deposits are concerned, is close to 10 trillion market. Another set of companies who grant loans, we call licensed microfinance company. And mind you, there's a 3 licensed finance companies are only available according to the Microfinance Act 6 of 2006. So there are, apart from that, and you noted that they have given the 3 licensed microfinance companies. So what are the 3 licensed microfinance companies are? Basically, we call them as, Berindinia Micro Investments and Lakjaya Microfinance and Dumbar. So those are registered. I know there are 30 odd microfinance companies are working in Sri Lanka, but they are not got the license from the central bank. That means they are not regulated by the central bank, right? But they also given a loan of around 4.7 billion. And I told you there are some microfinance, informal microfinance has given around 18 billion loans. There's a huge market for credit business as well. So in the lower segment, where the banks are not willing to go to that segment, there's an opportunity in the market. This is my market. This is the total credit market as far as the banking sector in terms of, right? And we move into the next level, the suppliers. According to the Michael Porter's, another set of factors we need to look at it, the suppliers. Now we have customer deposit, and those are suppliers who get mortgage loans and mortgage securities, loan from other financial institutions. Those are the power of suppliers, and that supplier also are now have a greater impact on my credit business. Why? What are the factors? Interest rates. Now we know we are going to discuss in more greater length the Sri Lankan policy rates, how it impact the credit business in Sri Lanka in my future presentations, right? And we need to look at it, the power of suppliers, and also we need to look at the other side, the power of buyers. As I told you, one of the major challenge we are facing, what is the customer? Customers are more educated, they are less loyal, and they are more techno savvy, they are well knowledge. Therefore, the bargaining power of customers. We need to give some special rates to customers, and thereby we have to compete with my competitor as far as the interest rates are concerned. But what was it and then? So still the Sri Lankan customers are interest sensitive customers. You need to understand that. Okay, then the threats is coming from for credit business from the non-financial institutions, right? And there are some other organizations like even when you earlier, I mean, maybe a couple of years ago, maybe 10, 12 years ago, or maybe 15, 10 years ago, if you want to get a um, consumer durable, so we customer need to go to the banks and to give them loans to buy this instrument. Now, what happened? Now all these sellers of consumer durables are having their own sort of easy payment schemes. So, so banks are facing threat from them. So big time dealers, and also from fintechs. So that's another important thing. So a lot of companies are now going to offer a lot of credit products, fintech companies, right? So they are having some strengths, right? And there are some weaknesses also, right? But anyhow, so we are facing a threat from fintechs, from the entire banking business as well as the credit business. So these are the competitive forces we need to understand, right? I hope you understood uh, the present situations about the uh, competitive forces affect my credit business, right? These are the second topic I'll discuss with you uh, under the competitive forces. We discuss how many players in the market, how many banks in the market, and how many microfinance companies in the market, how many credit leasing companies and uh, finance companies in the market. Yeah, all are fighting each other. And top of that, we have another segment, right? Like non-bank. I mean the stock market as well, right? And also the real estate. So these are the competitive forces affect my credit business. We need to understand who are the players in the market, right? Numbers, what are their uh, credit balances and things like that. Having understood this, the competitive forces affecting or affected by my credit business, and now I move into the industry analysis. What is the credit industry analysis in more details? I hope you can hear me. If you want to ask any question, uh, you can just raise a question for me, and I will try to explain to you. Otherwise, you can put an email to the IBSL, and I will in a position to answer the next time on the next sessions. Right, now let's look at it. The credit industry, right? Okay, the first I told you, assets. Assets play an important role, as I told you, right? Assets, what are the functions, why these assets are important, right? Maybe classification, we use asset for classify, and it is a regulatory requirement, and it is a profitability measure, return on assets, and also is a strategic goal. And I tell you, I take from the strategic goal how you can use your assets for strategic goal. Now, say for an example, you are in the middle asset based bank, middle level bank. That is mean 200 to 500 range asset base. So you can set your strategic goal. Okay, in 2025 or 2023, I am going to convert my middle level banks to the large level bank. So how to do that? So that is how you use your assets to identify or set your strategic goal. How can I convert my bank or medium bank level bank to the large level bank or maybe small bank to become a. So what are the things I need to do that? I will tell you how you can do it, right? Okay, the asset transformations, one of the things banks we try to do, as I explained to you earlier, we are converting your deposit into loans, right? And if you look at it, the total assets in the Sri Lankan financial systems, right? If you look at it, the total assets of the Sri Lankan financial institution, which consist of banking sector, other deposit taking institutions, specialized financial institution, and contractual savings like this, right? So altogether, what is our total asset base in Sri Lanka, right? It is how much you think, right? Uh, it is basically it is around 20.2 trillion. So what is the total asset base in Sri Lankan financial system is around 20.2 trillion, a huge amount. So which contributing large portion from the banking sector is around 15, around 14 odds, and then the finance companies and other deposit taking institution is contributing around 1.6 trillion, like that. And contractual savings like insurance, but not directly impacted the business, but is contributing around 3.8 trillion. So total asset of the financial system, how much is around in Sri Lanka as at end 2019 is something close to 20.2 trillion. Now, as I told you earlier, the asset also can be used to categorize banks, as I explained to you earlier, like large banks, medium banks, and so on. So therefore, assets can be used to categorize the Sri Lankan bank. So in this scenario, why loans and advances are imposed to the financial institution? Why? Of course, one thing is to definitely to contribute to the profits. But other than that, why loans and advances are important to the financial institution? Now, if you look at it, this figure, the total assets of financial sector, as I explained to you in 2019, is around 20.2. Banks are contributing 62% of this, and EPF and other superannuation fund, the next largest asset, is contributing from to the total asset is 15%, and central banks 10%, and insurance and other other groups like unit trusts and things like that is contributing to too. So I think now you have an idea about the total assets of the financial sector. Right. Now, if you further look at it, the total asset in Sri Lanka, compositions of assets of the banks at the end of 2019, so the total asset is how much? Is around 12.52, and which contributed, the loans and advances are contributing for 63%. Now you can understand why loans and advances are important for banks. Why it contributing to the total assets of your bank. Now I told you, you can use asset as a strategic goal. Now how can you use strategic goal? Okay, one thing is, okay, I am a medium bank now. I want to become a large bank in 2023. So in order to improve your asset base, what you need to do? One factor, you need to improve your loan and advances. If you can improve your loan and advances business, you can improve your asset base. Then you can achieve your strategic object, right? So that is why loan and advances are important in the banking sector. So now you look at it from this figure, this is your total assets in the banking sector, right? And look at it, your own bank. What are your total portfolio of the loan and advances? And take the ratio of that Your total loans and advances your bank is representing divided by your total assets, and you look at the contribution. Right? You can analyze the competitor analysis you can do by knowing this information. What is your credit market with your competitors? Right? Now, if you look at it, these banks in 2019 is around, as I told you, around 8.1. Now, apart from the loan and advances, mind you, investments also contributing to your assets, right? Contributing to your effort. Now, just look at it. The earlier I told you about this figure is total assets from banking sector. Banks, number of banks contributing 12.52 trillion. Now, if you look at it, the finance companies and leasing companies, specialized leasing companies, they are contributing only a small amount, is around 1.4 trillion. So majority of total assets is from banking sector, right? Okay, so if you look at it, the overall picture, the asset base of the banking sector increased by 728.7. That is mean 6.2% increase only during by in 2019, but when you're compared with 2018, only 14.6%. So 2018 increased the asset base by 14.6, and but in 2019, what is the growth is 6.2. So if you look at it, what is the growth rate of banking sector in terms of assets? 2018 is 14.6, and in 2019 6.2. So what is the factor contributing to this? Why the 2019 is having a less asset base of 728.7? One factor, the credit business in 2019 is not good, because why? Asset is contributed by loans and advances, investments and other things. But if the credit is not doing well, your asset also comes down. That's one of the reasons why the asset base has come down to 6.2. If you look at it, the total assets of the life and finance companies also reported only 1.1% and compared with 5%, 6%. So therefore, the total assets represented is around 14 trillion finance companies as well as the banks. Right. Okay. So now let's look at it, the loan sector, right? What are the loan sector? And this is the investment portfolio. And if you really look at it, the loan sector, the loan as advances are basically from the banking sector is around 8.1 trillion. And the private finance companies, non-banking sector is a 1.1, is a small amount, right? So the asset base also contributed little bit more from the investments. So if you want to improve your asset base, one factor is improve your loan portfolio, loan and advances. Second one, how can you improve your asset base? You can improve your investment, right? This is one of the contributory factors. Now, if you look at it now in a more broader sense, how the asset base of banking sector usually comprise of loan and advances of 8.1 trillion, investment of 3 million, and other sources is 1.4. Right? So the total assets of the licensed finance companies include loan advances, something close to 1.1 trillion. Investment is 0.1 trillion, and from other source. Altogether, you noted, therefore, the total assets represented, loan and advances, 9.22 trillion. So indirectly, so what is your total credit market? What is your total credit market is therefore is approximately how much? 9.2 trillion. So analyzing this total assets and how asset is contributed largely from loans and investments and other assets. So what is the loan contribution is around 9.22 or close to around 9.3, the total loan. This is your credit market. This is the Sri Lankan credit market, right? So you need an idea what is the deposit market in Sri Lanka. We discussed is around 10 trillion. What is the asset market? In total asset market, the banking sector is around 14 trillion. Overall is 20.2, but the banking sector asset is around 14 trillion. Deposit is around 10 trillion, and loan is close to 9.22, right? So you need to understand the markets of your credit business, right? Okay, now we are moving to a little bit of discuss about loan and advances, the industry. So we need to concentrate on credit business. Now, as well as all you are aware, in 2019, we had some Easter Sunday attacks and some political uncertainties, right? There's a lower demand for credit. And also, we had a lower credit growth in the banking sector. Lower credit growth in the banking sector. That is why your asset also increased only by 6.2, because the credit is not growth last year. As a result, asset also not. And in fact, mind you, licensed finance companies and Sri Lankan specialized leasing companies are having a negative credit growth. Negative credit growth. That is why our finance companies have a little bit of around 20 companies in Sri Lanka. Finance companies are having some problem with meeting their capital adequacy ratios, and central bank has already warned them, and they have already taken some steps, actions to cancel their license. They have a little problem, right? Why their credit is not growing. So that is the income for them, right? Okay. So if you really look at it, the last year's credit growth in Sri Lanka, it was significantly decreased from 19.6% to 5.6%. Huge drop. The drop is around 429 billion. Right? It's not a small thing. So that means the credit is not grown by the last year. So from 19.6 in 2018 to 5.6. So if you look at it, what is the credit growth in Sri Lankan market, financial market in 2019 is only 5.6. I will explain to you how much you need, right? Okay. And also the credit provided by the licensed finance companies and leasing companies and also declined 3.3% to 334 billion. And that was in 7.6% in 2018. In 2019, and it's a negative growth of 3%. Right? So mind you, so is credit business is not a good year for the 2019. Right? If you look at it, product wise, some products is having this growth, and credit business or the credit card business also go like this. Right. So in terms of products, in 2019, I'm talking about pre-COVID, right? 2019. What happened to our credit business? Now, so reschedules loan, the major parts. That shows the quality loan concept. Are we giving loans to correct people? Are we look at it? Their feasibility or their capability of paying. So if you look at it last year, a lot of loans were reschedules. And of course, the pony, there's an increase. There's a 17% increase of that, the total increase of 5.6. Credit card also increased 15.3. So certain financial loan products increase. But if you look at the meanwhile, the term loans is the highest positions about the loan portfolio for any bank. And that also is only 5% growth, right? And you'll note that personal loans and advances in 2018 is around 20.3. So that was also comes down to 11 point. So if you look at it, your total growth of 5.6 credit in 2019, right? This is how the loan portfolio breakdowns of that amount. So your rescheduled loan increase, your pawn increase, your credit card increase, but all your other loans are basically type of loans are reduced. If you look at it, the commercial banks loans and advances by type of security, right? So if you look at it, these majorities are given for immobile properties, right? Personal guarantees small. So just to get an idea about how Sri Lankan commercial banks, they're given loans and advances based on their security. So some of the loans are non-collateralized and some are collateralized. And that some of the collateralized also some immobile properties. You get an idea about what are the type of securities you're obtaining to banks when you're granting the loans. Okay, now let's look at it, the loans and advances given by finance companies, right? There are major loan portfolios comprising from leases of finance leases around 3.9 billion if you look at it, and secured loan and advances at 20.8 billion. Higher purchase is 4.3. And also remember the important thing, in finance companies, you noted that the pooling advances also increase. So that's the important thing, right? And so this is the loan portfolio of finance companies, right? Finance company. Right. Let's look at it. What are the sectors? The loans granted by finance companies or for banks, right? Now, earlier we discussed type of loans. How many, what percentage of term loan, 5% growth, personal loan is dropped, and then pawning increase, right? Like that. So, what are the sectors? What are the sectors the Sri Lankan banks has given? So if you look at it for consumption, you are given more loans, 18.5%. So the moment you give majority of loan for your consumption purposes, these are six main economic sector. But the moment you're giving more loan for consumption, the revenue generation from the loan is not taking place. So it's not a good thing. But the last year we have given 18.4%. The number of loans they have given is from the consumption. Of course, yes, construction also given a 15.6. Retail trade is going 14.2. Manufacturing 10.6. Infrastructure development and agriculture, forestry, fishing 8.1%. So when we look at it in the for latter part, when you analyze the economic factors, so we look at it, the sector-wise increase the country, right? If you look at it, okay, what is the contribution for Sri Lankan economy for sector-wise? Say for an example, agriculture. Say for an example, from other areas. So we look at it, how much of loan we have given to these sectors. When you look at it from these percentage, and you look at it, the economic growth in terms of sector-wise, we noted it is not enough. It is not adequate enough. The type of loans we are given is not enough to pull the certain sectors of the economy. So we will discuss at that point when you're discussing about the economy factors, how economic factors affect your credit business. Okay. Right, and this is the type of areas you see the percentage wise. If you look at it from share of the total loans from the consumptions, the type of this side is called consumption loans. How much of loans are given in 2019? Around 1.5 trillions given for consumption, and the value wise, the percentage is 18. So constructions again 1.3, like that. So the loans are given value wise and the percentage wise, Sri Lankan banking sector, right? You will identify where your banks need to be concentrated when you're granting loans, right? If you really look at it from the growth sector, from the Sri Lankan GDP, some figures, right? Now, the most important thing, year-on-year growth in credits to the private sector, so decelerated 4.3% by the end of 2009 as compared with 15.9. So another important factor that so expansion of credits to the private sector is only 236.8 billion. When you're compared with the 2018 figure is 762. But that's a good sign in 2020. So I told you we are discussing pre-COVID. Pre-COVID, I am referring to the period from 2019 Jan to 2020 March, basically. From post-COVID, I'm referring from March 2020 onwards. So my presentation structure is based on that, right? How pre-COVID those pestle factors impact the credit business, and post-COVID, that means after 2020, going to affect the credit business, right? To study the 2020 post-COVID, we need to understand what happened in 2019 up to March, 2019 and 2020 up to March. So this is the credit structure and the business. In fact, in 2019, so we have our credit comparatively expanded between 2020 Jan to March. If the same rate is going, we can achieve a good growth of credits to the private sector. But unfortunately, so this is up to March figures are available. So from March, this figure may be changed. But Jan to March shown a very good encouraging figure. Granting credits is increases, right? Mind you. So not like in 2019 was exaggerated. If it is a case, we can go for our targeted figure. But from 2020, we have to wait, and after March, we need to wait and see. If you look at it in a more graphical forms, you look at it in year-to-year growth, the credit is deteriorating. Only a small percentage, right? Is around less than 5%. In fact, it's 5.6%, right? Okay. Now let's look at it. The advances. The advances can be divided into two: direct advances and indirect advances. Money is going cash out is we call direct advances. Money is not going out, but sort of advances we call indirect advances. So if you really look at it in off-balance sheet exposures, uh, we noted that there's a decrease indirect advances as well in 2019 when we compared to 2018. Now, what are those indirect advances? We call them as usually simply we define what are the indirect advances as guarantees and bonds, performance bonds, uh, then shipping guarantees and things like that, and then the letter of credits. So what if the indirect advances are coming down mean what? So that be good for country. So the import, when you're importing the goods, we need to open LC. So LC is smart. LC is the bank job. The more open, the more number of LCs are open, bank get more revenue as fee-based incomes and other income. But if you noted, that's a government policy to reduce the import. So there may be a restrictions, but that may be the reason. But our indirect, as far as the banks are concerned, that's an income for them. So therefore, banks, remember, has impacted about the indirect advances. Right? That's decisions taken because of the government decisions, maybe the fiscal control or something. Money is going out from the country. Right? So therefore, there may be restrictions of importation. As a result of that, the banks impacted on that. Right? So indirect advances also not did well in 2019. So what are the factors contributing to this downfall in 2019? So let's look at it, some major points. One factor is macroprudential policy. So issued by the central bank or by the government to importations of motorcycles. So therefore, your credit business now, the curtail of importation mean one thing, you're losing your LZ business, and one day, so leasing and vehicle loan, auto loans also get affected as a result of that. That's the one reason, right? Not only we have to look at it from the control of importation mean control your indirect cost, indirect loans. So the income you're generating, that also comes now. And other side, so people are not buy some loan. So lending towards vehicles, and there's a LTV ratio. You know what is LTV ratio? The long to value ratio. They are being restricted, right? And also prevailing high market interest rate on lending. So deposit rates are high, so lending rates also high. So during 2019, we go around 12%, 11% deposit rate, and therefore your lending rate may be definitely 13, 14, 15 sometimes percent. So high interest rate, people not afford to take a loan. And also some political instability, and these presidential elections, and loss of business confidence also may dilute the economic activities. As a result of the interest, the credit business also has come down. And of course, I not forget to mention that Easter Sunday. And you noted that in drop in vehicle registration in 2019 is 27.2. Proportionately, your lending also comes down. So these are the key facts. What happened to our credit business in 2019? Right? I think you got an idea what is our total market of credit and what is the growth of credit in 2019. What are the factors is contributing to that? And now we look at it as an industry analysis. We compared to look at it is the NPL. Now, what do you mean by a quality of credit mean? So if your NPL is going up, that means what? Your quality of your credit is deteriorating. Now, if you look at it from this increase, basically from the total market increase from 3.4% to 4.7% as the banking concern. But whereas the finance companies has gone to 10%, but is okay in that case because NPL has ratio increasing from 3.4% to 4.7 end of 2009. So maybe due to a lot of business adverse conditions. So therefore, NPL sector increased by 118.5 billion 2009 compared to the increase of 102 billion in 2018. The volume wise, the value wise, the NPL has gone up by 102.5. So if you look at it from the total loan portfolio by the banking sector, so I told you is around 9.9 trillion, 9.2. So you look at it, the ratio is from 102 billion divided by 9,000 billion. So what is the percentage? That is how you calculate this percentage. What percentage is not good? How many loans you have given? And mind you, you are giving the customers deposits. So banks are facing high maturity mismatching. Because why short-term funds? We are giving long-term deposit. If things are not happening, regular payments are not coming, so bank have a problem, right? So we need to understand. So if you really look at an non-performing loans of the banking sector is increasing from 2000. If you look at from 2015 to 2019, and this comes down and then going down. So we are expecting, so we are discussing in the post-COVID period later on, what may be your non-performing loan going to be at least. So we will discuss at the post-COVID. Now I am discussing with you pre-COVID. That means from 2019 entire year up to 2020 March, right? So there's a separate sections or separate discussions I'm going to discuss with talk with you. Post-COVID, what happened to banking industry? Banking industry, not industry. Remember, credit business, right? Okay. Now let's look at it. Most of the reported sectors are reported NPL from agriculture and the forestry and fishing, 8.1%. So that is why so Sri Lankan banks are a little worried. If you look at it from the number of loans given to agriculture sector is not enough. One of the reason is maybe NPL is increasing, but Sri Lanka, agriculture is a, weather sensitive business. So it's depend on the weather condition of the country. But we as banks, this is our duty to look after our country, right? Banks, of course, we need to look at the profits, but also we need to look at it the national duty as bankers. So just because of our NPL is going from agriculture sector, we may not curtail our credit to that sector. So it is our duty, right? We will discuss more on post-COVID, all these things. So then the tourisms also, we had issues in 2019, we know Easter Sunday, and we have just recovered, and then again we had a problem, right? So therefore the NPL has gone from the tourism sector. And retail sector also 6.3, and the construction 5.8%. These are the higher NPL, was higher NPL ratios impacted or contributed by these main areas. That is agriculture, tourism was. There's a genuine reason. We had a bad weather condition, we had a bad Easter Sunday attacks, and all contributing to little higher NPL. But remember, despite the increase in NPL ratios during 2019, but still at a manageable level. Why? Because so our regulator have some, some regulatory measures to improve your bank asset liquidity asset ratio. The buffers, and due to those factors, banks in a position to absorb such bad NPL ratios. So due to thanks to adequate buffer, capital buffer created through uh, capital adequacy requirements. Right. So let's look at it, the total loan provisions. Now, as a result of that, now provisioning means you're losing your profitability. And your all banks are allocated around 48.5% billion during 2019. Now, of which specific provision accounted for 19.96%, right? And remember, so the moment you have a higher NPL, and we need to provisions our provisions for loan loss. So therefore, so ultimately it boil down to your bottom line. So we need to understand. So granting a quality credits and try to follow it up proper credit recovery plan. Now we are going to discuss later on under regulatory environment and legal environments what actions the central bank has taken to recover your credits. Right there. Okay, so if you look at it, this also one time this provision sign now is around this graph showing you the provisioning of NPL. If you really look at it, our NPL ratios of your major players like banks, some of the banks ratios are BOC, NPL ratios, right? Some but go little increase, right, in 2016, 2017, 2018, and 2019. So you look at it, there are some 4.7, industry is 4.7, and the first column show the industry, and the next column show the respective banks, and you see Bank of Ceylon 4.8, 3.3 by PB, NSB 1.6. That one of the reason is NBC is not given much bigger loan, so their NPL has come down definitely. Therefore, at the commercial banks and HNB and the Sampa, and HNB is badly hit because they have given 55 billion, to my understand, to tourism sector. So after this Easter Sunday attack, the hotel industry, the tourism business is badly affected, and they have given around 55 billion, to my knowledge, to the loan to the bank to the tourism sector. So that is why maybe their rate has gone up, like some. So this NPL ratios show your NPL for major players. So where are you now? You are working for that particular bank, you know what is your NPL ratio, right? Which compared with industry ratio. So you get an idea about what is the total credit market in Sri Lanka, how it's grown, what are the issues, and why it was happened like that, and things like that. And also, if you look at it from since 2017, and you have noted, despite the fact of all these factors like Easter Sunday attack, all the things, there is a tendency for NPL to go. So that we need to take care of that. From 2017 onwards, right? Trend in credit growth, right? And reschedule loan, that's the important thing. Surpassing the credit growth. So that is the little concern we need to look at it. So it's not happened on 2019. If you look at it from 2017 onwards, right? NPL growth and the rescheduled loan growth accelerated, surpassing the credit growth. So that's the things we need to consider. So that means, so we need to address this credit recovery policy very. So we have to strengthen our credit recovery policy. And if you look at it, those are we discussed in the banking sector. If you look at the LFC sector I mean the SLEC sector, and also it's not good. It's going around 10.6. That's alarming. Banks are having 4.7, and whereas the uh, NPL of the licensed finance company sector and SLEC sector is going by 10.6 from 7.7. The people who are working in the finance companies need to be take more attention for this, right? And again, we can say this is again due to the Easter Sunday attacks, and uh, this was happened, right? Okay. So if you look at the non-provisioning and provision coverage of the non-bank sector is like, okay. So up to now, what we have discussed, we have discussed, we discussed about the introduction, right? And then we discussed about the competitive forces affect my credit business, our credit business, and then we just complete the credit industry analysis. We just completed. I think we got a clear idea about up to these points, right? What are the key points we learned up to now? Okay, what are the duties of a financial institution as a credit duty? And we discussed the major players to whom you need to be competed, why we need to compete with them, and we discuss the total overall banking market in terms of deposits and things like that. And then we concentrate uh, to credit more specifically. That's our topic, higher diploma in credit management. So we need to concentrate on the total market. Why we need to improve asset? Because loan and advances are main contributor to assets. So what is the market situation? What is the total asset market in total banking market in Sri Lanka? What is the total loan portfolio in Sri Lanka? Whether it is increasing? What happened last year? What is the normal growth rate? Uh, uh, how the NPL is behaving? But the point I want to highlight is, don't think in 2018 alone. For NPL increasing is more than the credit costs we have shown from 2017 on. That we have to address, right? So these are the points we are going to discuss. We have already discussed up to now, right? So the next points, having understood the little bit of introduction and uh, the competitive threats and the industry, and now we are going to look at it. Certain economic features and legal, political, ecological, social, cultural, ethical, and technical factors, how it affect your credit business. Now, sometimes you may thinking how the economic factors contribute to the credit. Yes, there is. We will show you, and we will discuss how these factors are impact your credit business. Now, collectively, all these factors are, we call them as pestle factors, where you cannot control. We have to live with them, right? So first we look at it. The first point is we take the credit, we will take the economy factors, and we try to stop from today, and we will continue from the next weeks, right? Okay, first we look at it, the economic factors, how the economic factors credit impact your credit business. Okay, before that, we are all are living in a VUCA business environment. So what is VUCA mean? Right? It is a volatile, uncertainty, ambiguous, and complex business environment we are living. So our business environments today is very difficult. In Sri Lanka, this nice thing happened in 2019. So, you know, the World Bank classifies Sri Lanka countries based on their per capita gross national income, right? The World Bank categorizes countries based on their national income into low income country, lower middle income country, upper middle income country, and a higher income country, right? World Bank based on the national income. So the countries are graded based on low income, lower middle income, upper middle income, and higher income. Those are the four categories the countries are categorized by the World Bank based on their national income. Now, as a good sign, despite all these problems, Sri Lanka graduated to the upper middle income in 2019. So it's a good thing. It's a classification. Good thing and a bad thing. So Sri Lanka categorized as a middle income, upper middle income. So, so we were uh, low income country status. So you see the Sri Lanka transit from low income country status to the lower middle income country status in 1997. So we spent almost 22 years to move out from the lower middle income track to uh, the upper middle income country status. Now we are a upper middle income country. So not anymore lower middle income. That was we enjoy from 1997. So it's a good sign because the country is doing well, the economy is doing. That is why we upgraded to upper middle income. Now, what is a sad side of this? Now, when you graduated up to the upper middle country status, when you are going for a loan, so they may not look at it anymore as a bad country, or maybe the low income country. So for that, so we have to pay high cost to get a loan. So that's another sad side of graduated to the upper middle income. When you go for low income to upper middle income, so it's very difficult to get a loan to Sri Lanka. So we have to pay a little higher interest, maybe high cost basically, right? That's a good sign. Okay, right. If you want to go from here to the next level, that is what you call the high income level. So we need to look at it these areas. One factor is unfavorable demographics. According to Frunchings and Soksak 2017, they have identified 7 factors. If you go from middle income to high income, so your country has to look at it. So we must have an efficient market, right? You have to have economic diversification. So we need to have efficient labor market. So we have to look in after all these things. Then only we go for next generation and next level. So hopefully, maybe another 10 years time or maybe 15 years time, we may in a position to go to the higher income. But mind you, so in 2019, we have reached the upper middle income. Okay, let's look at it. This is a snapshot of the Sri Lankan economy in 2019. What is Sri Lankan economy in 2019? So you start the year in 2019 as SDFR is 7.0. You know what is SDFR? Standing Deposit Facility Rate. And SLFR is 8.6. These are central bank policy rates. So we start with the in 2019, right? So this is our policy rates, and our physical deposits around 7.3, and our debt to GDP is around 86.8% of GDP. And important things, we have overall surplus in BOP of 0.4 billion. That may be we restricted our imports and that is why there is a positive gap. And our official gross official reserves is it's 7.6, right? So that one reason is during latter part of 2019, our rupee was marginally appreciated by 0.6. So that is one of the reasons why we have a gross capital reserves of 7.6 billion. These are the snapshot of Sri Lankan economy. If you really look at it, the total assets of the financial sector, as we explained earlier, is 20.2. We have inflations range from 4 to 6, right? Core inflations and headline information. So going between 5 to 6, 4 to 6% range. That's a good as far as the country is concerned. But unemployment rate is somewhat little increased from 4.4 to 4.8, to my knowledge, from 2018. And the economy growth in Sri Lanka in year 2019 is 2.3, right? Economic growth is 2.3. So uh, in fact, we have targeted 3.3 in 2019, but we end up with 2.3. But if you really look at it, some information, what happened in the growth rate in from Sri Lanka, if you really look at it from our economy, from the growth rates, we have 87.4 US dollar, our economic total value, and in 2017 3.6 and 3.3 in 2018, and 2019 it comes down to 2.3. So gross, if you look at it, the GDP moved from 87 to 84 billion. So we have our economy value is 84 US dollar billion. When you're compared with this figure, with India is around 2.3 trillion GDP. And if you look at it, this thing from America is around close to 24 trillion. So you can see our economy, when you're compared with our neighbor is India, is around 2.2 trillion economy. When you're compared with Sri Lankan economy is around 24 billion US dollars. And if you look at the American economy, is around 23 trillion. So doesn't matter. So this is how our economies move. And also I want to show you something. Our economic rate in 1950 to 2014, our economic growth was around 4.5% range. One year, I think, 1 year we have gone to minus, but respective of that, from 1950 to 2014, our economy's growth around 4.5. But from 2014 up to 2016 or so, our growth rate is 3.56% range. This comes down from 4.5 average. The last how many years? 1950, 2000, how many years? 40, 50 years. So it has maintained, but has come down from 2004, 14 onwards to 3.6%, and now it has come down to 2.3. Now, so we are going to discuss post-COVID now. So there, what may be our future growth rates, right? So we will discuss that part. So these are some of the things. If you look at the balance of payment, as I told you, the positive, and this is how the Sri Lankan inflation rate fluctuated during the last year, right? It's fairly acceptable from 4 to 6%. Right. If you look at the global growth in 2019, so global growth also declined compared to 2019, right? And due to some pressures, geopolitical tension between China and America, so the economic growth also not doing well. Right, and according to World Bank, World Economic Outlook, IMF, released in April 2020, and they said it's around 2.9% economic growth in the global with compared with 2018. Now you may thinking now, why we worried about the growth, global growth? What is how it impacts the Sri Lankan credit business? Right? So you must be thinking, what is the relationship? Mind you, if the global growth rate is high, so there may be a lot of exports to other countries. So more export means, so as bankers, we can give more, more pre-shipment loans, more loans facility for our customers. Because world economy is doing well, only they will buy our products. So the economy is doing well, so it's contributing to the country. And the economic activities taking place, we can issue more credits to the those interest business people. Now we will see how these factors contributing to the the banks, right? So there's a relationship between global growth and Sri Lankan business. Of course, the national income, so national growth as well as we do the same thing, right? So what drives the economic engine? So in any country, so credit expansion, remember, boost the economic growth, and credit contraction reduce the economic growth, right? So if you want to improve your credit, and then economy also increase. So there's a relationship between these two, right? So credit expansion boosts the economic growth, credit contraction reduce the economic growth. Now, if you really look at it from contribution from credit to GDP growth, and that's the important thing. You can see the relationship with the credit with the GDP. So if your country's GDP to be increased, you need to increase your credit, right? Now, if you really look at it, credit as a percentage of GDP, and which indicated the financial deepening of the economy. Now, if you really look at it, what is the GDP percentage of credit? And it will show you how we are as bankers contributing to the country's economy, right? But if you really look at it, and this percentage is not good, is around 30 from in 2019 is 38.6 to the contribution. If you look at it, this figure from our related countries, the private sector credit to GDP contribution, if you look at it from Thailand, Malaysia, and Vietnam, so GDP credit to GDP percentage is almost above 100%. So that is why these countries are doing well. That is why these countries are performing well. Their GDPs are good. Their general reserves are good, because so the credit to GDP is high. So if a country economy to be boosted, the GDP, credit to GDP ratio need to be high. So this is a very classic example why other countries are doing well, because the private sector credit to GDP ratio is comparatively very high in those countries. So one factor, therefore, we need to look at it. If you increase your credit to the private sector, you improve your GDP. That's classic shows in the other countries, right? If you look at the relationship between non-performing loans with the GDP. Now, if you look at this red one, is the moment your NPL is going down and your GDP also comes down. So that's the relationship with the help of FAST from 2010 to 2019 figures. Non-performing loan increase me, your GDP has come. So therefore, you can understand now how the fiscal factors, the economic factors contributing to your credit business. There's a relationship between all these things. GDP, private credit goes to the GDP, and how non-performing loans is contributing to the GDP. So all are having some sort of a relationships. Okay. So with this point, up to now we discuss competitive forces, and we discussed credit industry, and we just completed pre-COVID-19 on economic factors impact the credit business. Right. So we stop today, and we are going to continue how other economic factors like socio-economic factors, technological factors, ethical factors, legal factors, important regulatory aspects impact my credit business, right, in the next couple of weeks to hit. Right. So we see you on next Saturday, maybe the same times. And thousand apologies for any because we are first time we are introducing this IT based education platform to all. Since it's always better to meet you one-to-one basis, and then we can see your understanding. And if you have any problem, you can just uh, drop down me a email to jagat.jkg@gmail.com, or you can just SMS to me in not 777-864-202 is my personal number, or for to IBSL. So I will try to answer your queries for next time before I start my lecture. I hope you understood, and mind you, you are studying higher diploma in credit management, not diploma level, not postgraduate level, and your high diploma level. So I hope you have a thorough knowledge about the credit industry and credit business, and I think I will add something to your knowledge. So we'll see you on next Saturday, and this can be recorded, and you can relook at it, and any queries, please put down. Thank you very much, and patiently with me for 2.5 hours. Thank you very much.